Hello and a warm welcome to my channel where I cover stocks and derivative data on a regular basis. In this video, I've covered DLF, India's biggest real estate market cap stock in terms of market cap, no? One of the oldest real estate listed firms. Now we can see from the time of its listing, it was at a glory in 2008, and for 8 years in the monthly time frame, we can witness that what a decline it had, major decline from 1000 down to 80, and from there 2016 some recovery all the way to 2018, and then 2 years again of a sideways correction took place, which has now actually started erupting out in a major uptrend. So in Ichimoku terms, we've had a wave out here which had a counter trending wave, and now we have a bigger one emerging out here. So this big one could further, in terms of long-term trend, monthly still has got a lot of upscope because it has managed to close a monthly above this line out here, this fractal out here, and it has breached above it and is sustaining above it even though June has just started, but May it closed above it. So from a long-term perspective, it's a fantastic bullish setup as per Ichimoku in the monthly time. Now let's have a look at what the weekly tells us in the slightly medium term duration. Now in the weekly also, as per Ichimoku, still standing strong, still doing good, but I have a bearish harmonic butterfly pattern which has formed at the current price of 491 out here. Now this bearish pattern suggests that if it gets activated, then it could do a pullback to 450 to 425, where you can see out here that this particular breakout took place. After a long period of consolidation, we had this out here. So that's 400 out here. So it did some major time in this place out here before it has managed to take a breakout out here. Now, if this bearish harmonic pattern works in the downward move from here, then we could see that it would come this gap up out here near 440 might get covered, or it might just push a bit more down towards this breakout area before it again assumes its resumes its uptrend from there. Now the bearish harmonic, even if the bearish harmonic pattern is formed, it is not necessary that it is given a sell confirmation yet. It is there at the potential reversal of that, not yet confirmed. We'll look into it in the daily time frame, but before that, let's have a look at what the derivative data is also telling us about DL. Now here in the options data for the June expiry, we can see that on Friday, that is June 2nd, we had some considerable amount of short covering happening in these strikes out here. Quite a lot of them has taken place from 470 to 480, big amounts being covered out there. And some put unwinding has also taken place, those who were bearish on it. And interestingly, in the 490 call, which is quite steep out here, 490, even the 480 call is now huge, but it saw short covering out here. So if it sustains above this level of 480, 590, then we could see more short covering happening in the 480 call also. Now in the 490, even though we see some addition happening out here, this could be apart from the short covering which must have taken place. That is, supposing some people have covered the short, but more people went to long it intraday, the call. So we have this kind of scenario also possible, which I will try to show why that could happen in the charts. Now, the highest strike for the month is at 500. Now, this is always a psychological round number figure, apart from the fact because of the bearish harmonic pattern which is there in it. Now, the only aspect where the bullishness from the option data is missing is that we're seeing very little put writing happening out here. The overall put, even though the big one is at 480, and after that it's quite down, there is no significant put writers out here, at least on the 2nd of June, we didn't see them doing anything great at that time. So that from a bullish angle, that would give more confidence if we see some in the money put writing happening, which would emphasize that yes, it's protected with a lot of support in the downside. Now let's have a look at what the future buildup of DLF has been in the last 5 days. Now here in the last 5 days, we can see not at least for the past 5 days, there wasn't much activity, just 2% hike in OI against a 2% hike in price. But on Friday, which is what we are seeing in the option data, also short covering of calls and fresh call buying also happening, is because of that sharp OI rise which took place on Friday with a price hike also. So the bullishness came out only on that day. Will it be a carry through? Let's now understand it from the charts of the daily and the lower time frame to assess what should be the move ahead for it. Before I go ahead, just a reminder to those who want to learn harmonic patterns, Ichimoku, trading psychology, risk management. My course is available. There's a link in the description box. Please go through it. And if you have any doubts, queries, you can shoot out an email to me or message me on Twitter. I'll respond to it. The courses are from basic to advanced, all in detail. There is a combo offer if you go for multiple courses. And in the trading psychology risk management course, you get 10 live sessions with me in which we will learn every day different ways to reduce risk and to understand where the strength and weaknesses is in sectors and in stocks also. And a lot on trading discipline will also be covered in the courses. The courses have hand holding, clarification of doubts, and also confirmation of whether you have understood the topic on a one-on-one basis. Now let's have a look at the DLF daily time frame, because based on the derivative data, especially the option data, what we are seeing is out here with the bearish harmonic pattern which has been developed, we can see some kind of a wedge formation happening out here. Okay. Now wedge normally after a rally is a bearish signal that the stock might see some profit booking correction or turnaround from here. But again, the wedge needs to break below 480. Only below 480 will we see any selling pressure, which could bring it down to this gap area of 440 or further down to this Ichimoku cloud, the future cloud, which is quite bullish in this case. So 480 is the trigger, sustaining below which the stock would get weak. And if the stock starts trading, now let's look at the upside. If this harmonic pattern fails, and if we have a scenario where the wedge also fails, then the stock will start doing exceedingly well above. Just a second. It will start doing exceedingly well above 510. So you above 510, I would be extremely bullish on the stock. So this zone of 480 to 510 can be a bit dicey from both a long and short point of view, because there's no confirmation of short and it is at a resistance which warrants a bit of caution out here. But above 510, the stock is so strong in its path. There is, as per Ichimoku, there is no resistance at all to try to stop it from further moving up, where it might face a minor resistance around 600 odd and then a bigger one at 800. So from a medium to long term perspective, stock is extremely bullish. Whether this harmonic pattern pulls it down and then resumes a rally, or if the pattern fails, it just takes off from there also. So to sum it up, in the short term, which is extreme short term, in the lower time frame of daily and lower, a bit of caution. In the medium to long term, from an investment point of view, and it's a fantastic thing, either on the upper, from an SIP point of view, or also from picking up above the breakout zone in it. A disclaimer before I wind this up. This is not a trading or investing advice. This is an educational video based on Ichimoku and harmonic patterns and derivative data. Please do your study thoroughly before taking a decision whether you want to buy or trade in it in whichever direction you are looking. Until then, happy investing, everyone. And please don't forget to like, share, and subscribe to the channel.